Welcome back. Let's talk about mutual funds and specifically about equity mutual funds. It's clear that there are plethora of options available to you, but it helps when you identify the use case of each of those options, and then you can fit that into your overall strategy and your own risk profile. Let's talk about multi-cap funds today. And the reason we're talking about it is because there is a new fund offer that is currently available today and tomorrow. Some of you will already know about this, but in case you didn't, let me remind you about this. About a year back, the SEBI came out and said that multi-cap funds broadly had to be changed. The regulations for those funds had to be changed, and the reason why the regulator said this is that it wanted these funds to be more true to label. And what does it mean when you say true to label? It wanted the allocation of the assets that were held by these mutual fund schemes to be more equitably distributed between large cap, mid cap and small cap companies. That is where now multi-cap schemes come in, and there's a new one that is being offered by Kotak MF. We're joined in fact by the Chief Investment Officer of Kotak Mutual Fund, Harsha Upadhyaya. Thank you so much, Harsha, for joining us and for taking the time. I want to start by asking, you had at that point about a year back the largest multi-cap fund available. That you shifted and it's now become the largest flexi-cap fund in the industry. There is a substantial amount of assets in that. What is the difference for the viewers that are not too familiar with it? What is the difference that the new fund will have when you compare it with the flexi cap?
Good evening. Yes, you are right. We did have Kotak Standard Multi-Cap occupying that position a year back. And as you rightly mentioned, there were some changes in terms of how investments could be done in various market cap buckets. Until then, the multi-cap funds were allowed to move between any market cap category between 0 to 100%, depending on the view of the fund house and the comfort of the fund manager. But at that point of time, SEBI came out with a regulation saying that the definition of multi-cap category would be those funds which will invest at least 25% each in categories such as large, mid, and small cap. And subsequently, they also provided flexibility for the existing multi-cap funds of that time to move to a new category if required, which was called flexi-cap category, wherein there were no such restrictions on the market cap. Why did we move our Kotak Standard Multi-Cap into flexi-cap category? The reason was very simple. The fund was always investing between 65 to 75% into large caps, although being a multi-cap fund. And that is what the communication to the investor was. And we did not want to change that particular strategy because the investors would have got confused and their experience would have been contrary to what we had promised in the first place. So to that extent, we moved to the flexi-cap category and continued to manage the fund in the same fashion as we were managing earlier. Now, as per the regulations, we can actually look at launching a new fund in this category as this has not been occupied by us. That is where we have just launched a new multi-cap fund. It is open for subscription now. The last date for subscription is tomorrow. And then subsequently, once the allotment is done, it will be an open-ended scheme and people can redeem and subscribe whenever they want to. The main difference here is the category definition, wherein as a flexi cap fund, I mentioned what are the restrictions or the lack of restriction, but here there are a set of restrictions which make the fund to invest at least 25% in large, mid, as well as small cap category. So that's the only restriction that we have. But obviously, this fund is for those investors who look at long-term appreciation of equities, because you're not likely to time entry into mid caps or small caps. You are going to hold them for the long term. And that's the investment approach that you will have in this particular fund.
I want to talk a little bit more about that, Harsha, and that what is the use case for this particular option? If you're talking about the multi-cap specifically, the earlier use case more than a year back when we were talking about it is that you had large caps, and this was actually the case also, predominantly large cap. And as a kicker, as a satellite allocation, you had some towards the mid cap and towards the small cap, which was higher risk and also potentially much higher return. But here you have a very substantial allocation towards both mid cap as well as small cap. So what is the use case for somebody getting into the fund?
See, clearly, when you look at risk return profile and try to plot various products or various product categories, you will say that large cap funds are lowest in terms of risk possibility and also potential returns, whereas the small cap funds would be at the other extreme in terms of both higher risk as well as potentially higher returns. All other funds would occupy various other spaces in between this large cap category and the small cap category. I would put flexi cap just next to a large cap, especially our flexi cap fund, because we invest about 65 to 75% in large cap and rest in mid and small. So that will be slightly higher risk compared to large cap, and potentially it can give you better returns given the mid cap exposure. This particular NFO, Kotak Multi-cap Fund, I would put it somewhere in the middle of our entire product portfolio, because at all points of time, you're going to have at least 25% in 3 of the market cap buckets. So to that extent, it's good for somebody who just want to take exposure, a diversified exposure across segments and live with it. This is not for somebody who wants to take tactical allocation into mid caps, small caps, and then go back to some other category, etc. History has also shown that it is very, very difficult to time the upturn or the decline in various market cap segments. The latest case being March 2020, when the small caps were really, really attractive from a valuation perspective. And subsequently, they have given almost 2x returns that of large caps. But I really do not know how many investors really look to increase their equity allocation during first COVID wave, or I don't know how many of them actually increase their allocation to small cap funds. So to that extent, timing has always been difficult to investors. Forget investors, even for experts, it's very, very difficult. And that's where this fund has an USP, wherein you will always have 25% each into the 3 segments. So to that extent, your exposure will continue across cycle, and hopefully over a cycle, despite maybe higher volatility than a flexi cap fund, this category should deliver better risk-adjusted returns, given that in every cycle you will have a great time period even for mid and small caps. So that's what we are trying to offer in this multi-cap NFO.
I think you've summed it up very well. Just a question in terms of the risk, Harsha, and I think this is where you kind of alluded to it already, but I want to discuss it a little further. In that there is more volatility on the broader end of the spectrum, and therefore when there are corrections, which we have not seen to a large extent over the last 12 months at least, a little bit more than that, we've had more or less a secular uptrend. But when there is a sharp correction, there is a drawdown more so on the broader end of the spectrum usually. So investors should be aware that those events will occur, and those are actually opportunities to add on if you're looking at a very long-term perspective. Is that more or less correct?
Yes, you have put it very correctly. I think those periods of volatility can be used by investors if valuations are comfortable and if growth is expected to be reasonably strong at that point of time. Then I think one should use those moments to increase their allocation into such funds so that you get to enter some of the segments at lower valuations. And we have always seen that whenever economic recovery gains momentum, the broader set of businesses also do well. In fact, they tend to do much better than the large caps at that point of time, because there is always a tailwind for such businesses, which is definitely required. Otherwise, the large caps would do much better in terms of business always. So that is a particular point of time which can be used to get into, let's say, a multi-cap fund, which will use that inflow into buying into some of those segments if the valuations are attractive. So I would say that one should use that.
Harsha, talk to us about the current market scenario if you can. And if not necessarily speaking about how the multi-cap fund is going to operate, then perhaps you can broaden the scope and you can tell us how you're looking at it, because most of the commentators that we're speaking to right now are talking about the fact that we're buoyant, we're at elevated levels, and so now it is more a stock picker's market. But from a strategic point of view, as a manager of funds, how does your team look at it in terms of considering that you have to now have a 25% allocation towards mid cap and small cap? What are the factors that govern that selection?
See, when you look at markets in general, definitely the valuations levels have moved up in the last 12, 15 months. So to that extent, I would say that there is some amount of risk in the market. It's not going to be a one-way street that we have seen in the last 12 months in terms of performance. Until now, we have been seeing successively every quarterly results, the estimates getting beaten, and there is a very, very strong underlying fundamental improvement that we have seen. And as we get into the next few quarters, we believe that there is unlikely to be as big a risk from COVID as we have seen in the past, and economic momentum should continue. The biggest positive for Indian markets now is when you look at the overall corporate profitability cycle as a percentage of overall GDP, that number is seeing an uptrend. In fact, from financial year 2008 onwards until financial year 2020, this number had fallen from a high of 7.8% to 1.6%. And this year, we are likely to reach a level of about 2.4%. And over the next 3 years, this is likely to move towards the 4.4 or 4.5% range. This is based on the expectations of earnings recovery over the next few years. So this is something that everyone should keep in mind. Given this trajectory of improvement, the valuations are unlikely to be cheap. So you will not get the kind of valuations that we had seen during the COVID lows last year. But one has to be taking a more long-term approach in terms of investments. It should not be for the next 6 months, 12 months, that we anyways don't suggest. And especially at these valuations, one should play the entire cycle of equities. That's where I would say that multi-cap fund is a better option, because you are not trying to time entry or exit from mid caps and small caps, which are considered to be more volatile than large caps, but you are going to hold them for a reasonably long period of time. And we believe that if the fundamentals, as I explained earlier, pan out, then the mid and small caps can continue to outperform large caps. So to that extent, I think this is a decent period for the multi-cap investors to look at.
Okay, last comment, and you've already alluded to it, but I do want to understand from a strategic point of view, now that I'm getting this opportunity to speak to you, Harsha, in terms of sectors, what stands out to you right now as you're looking at the market and as you're looking at potential? There are, of course, external risks that people are highlighting. This week we're talking about the possibility of Evergrande and whether or not that could become an issue to watch out for. But what gives you confidence that India as a story, as a growth story, will continue to be there?
Yeah, whatever I'm going to say, please do not take it as a forward guidance in terms of our portfolio construction of Kotak Multi-cap Fund. This has been our general view on the markets. As I said, the valuations are higher than the long-term averages. So to that extent, any negative sentiment or negative turn of events can lead to volatility in the market. One should be prepared for that. But that volatility is unlikely to be seen as end of the upturn for equities. As I explained, while there are risks internally as well as externally, we continue to believe that we are on a good fundamental wicket. We have seen large amount of deleveraging by corporates over the last several years. The excess capacity that was there in the Indian manufacturing industry is slowly getting used up. So at some point of time in the near future, we will see a change in investment cycle trends, and that is going to bring all around improvement, including the credit growth, which is so essential for performance of financials, etc. So in light of this, we continue to remain overweight on domestic as well as global cyclical baskets. And all the sectors such as financials, industrials, cement, various categories of manufacturing are something that we are evaluating, because we believe that if economic momentum continues its momentum, there is a possibility of earnings upgrades as well as possibility of re-rating in some of these sectors. Whereas some of the other sectors which are more defensive, which have done very, very strongly over the last 12, 18 months, such as IT or FMCG, may not give you that possibility of re-rating from the current levels, as they're all trading at very high multiples compared to the market as well as to their own history. So to that extent, we believe that the possibility of re-rating is available in more in the cyclical sectors, and that's where our focus has been in the recent times across our equity portfolios.